Hey everybody, welcome to your daily update for SOL and BTC. So it is a weekly close. We've got a 3-week close, 13-week close, and a 1-day and a 2-day. So there's a wee bit of stuff going on. We've had a pump from yesterday. So yesterday, most of the closes were quite bad, and so then of course we had a little pump up into resistance, and then the pullback, and that's kind of where we are now. Just pretty much we just pulled back to where we started. But where we started is quite key. So if we close over certain levels today, then great, we get a bit more support. If we close under those levels, then yeah, we could see a pretty good pullback. It's a very mixed sort of market at the moment, where you got some coins that are just absolutely popping, and then you got other ones that are just sitting there doing absolutely nothing. So looking at the daily liquidity, BTC is pretty much just showing what you'd expect. It's pulled back, so people have started shorting. So now we've got some new liquidity brackets up to sort of 127 and nearly 128, which they're all just key levels that we know it's going to go to. It's just a case of which direction does it go first, and it's showing liquidity down to about 119, 120, which of course would be some of that support that we hard closed yesterday. So that would be the most bullish sort of pullback you could see, is just a pullback maybe to around that 120 area, which we'll see on the charts, and then pump up from there. As far as SOL goes, like the most bullish pullback would sort of just be to that 218, 220 area, and then it could easily pump up into the 240s based on the daily. If we look at the 7-day, 7-day is where all the juice is on BTC, and it's still showing clusters down to sort of that 114 area, and some of the high time frame charts show a pullback to 114 would probably be very realistic in the coming days. So we'll have a look at that when we get there. And the same, 126, 127, 128 sort of to the upside there is pretty much unchanged on the 7-day. 240s unchanged on the 7-day when it comes to SOL, and down to 203.6, which is an interesting number because 204 is the 3-month backside candle, and I just can't help but wonder if we're just going to go down and hit that thing and then fly. There would be some up and down in between, because we've got daily levels and daily holds and stuff like that pretty much represent all of these price brackets. So your 214s, your 212s, your 216s, every little group of liquidity you see on here is some trader trading some range thinking it can't go lower than that because they haven't zoomed out, and they'll probably get an entry and they'll probably get an exit as long as they exit at the appropriate time. It's just if they don't exit at the appropriate time that they'll get screwed over. So that's pretty much where where that liquidity is sitting. And so when you look at the 7-day, you see that big chunk down to about 220. So that's the first group. They don't think it's going to drop at all. And then the next group is the ones that are banking it's not going to go below 220, and they're sort of going to get liquidated if it goes down to sort of 214. And then there's the ones banking it's not going to go below 214, and so on. So. And it's really like, the old saying of, are you bullish or bearish? Are you bullish? Well, it depends on the time frame. Like, are you bullish based on a monthly time frame? Yep, then cool. Trade on a monthly time frame. Are you bearish based on a daily within the monthly? Yep, cool. You could be right as well. So when someone's saying, I'm bullish on this market going up, well, yes, cool. Depends on the time frame. And someone saying that it's going to go down, well, depends on the time frame. So if we look at the 30-day, 30-day is so completely out of whack, it's not funny, between BTC and SOL. So this is pretty much now showing that the real hallmarks of the final stage of the bull market, where your altcoins are going to really have the ability to pop and go up, compared to BTC, which could range, could dip back a little bit, go up a little bit. Like it's very likely that we start to see BTC become more boring soon, and then risk basically starts to rotate into things that are moving more. So we've all seen some of these altcoins just randomly pop 16, 20, 30% in a day. You look at we'll look at Cook again later. It just took another big shoot up into the next level, and Zcash and Zcash the zombie. So everything's just going, and there's a bit of a tin hat theory behind some of these old zombie coins popping, and that's that there's all these retail people out there who bought those 4 or 5 years ago, 6 years ago, maybe even the cycle before that, and they are the best advocate to bring in fresh exit liquidity now. So if their old coin that went from $300 to $20 suddenly goes back to 150, well, they're feeling rich, and they tell 10 of their friends that they should get into crypto, and that's right at the end. So that's it was the same last cycle. I don't think it's going to be any different this time. So just bear in mind that if cycle theory still exists, everything is pointing to this being pretty close to the end of it. So the 30-day liquidity, we should go see that 249, 250 area easily. We've got the daily rejection at 249. We may overcome that. We've got some levels in that 243 area, which might stop us getting there, but and if we head to the downside, pretty much you can see it's still showing the 200 area, that 203 as being pretty much where they've taken the bulk of the liquidity. If they head down there and they've grabbed themselves a couple of $1 billion and then maybe move up from there. So which way we go first is always the hard thing to figure out, but it's easy enough on the real short term to figure it out. It's just hard over the long term. So let's have a look at this from the other direction. So you get to see some pretty colors. So all it's really saying is the same thing. You've got that sort of on the low time frame liquidity, you've got the base down there at about 114, and you've got the top up there at about 128 on BTC, and then that would sort of be your 217. I actually think your 217 would be more like 216, because 216 is more of a key level than 217, but the price has to come down for this liquidity to form, and then it's sort of showing up there to about 245 to the top side. So it's all pretty much in line. The scary thing is that you're starting to get a lot of the liquidity gaps filling in on the high time frame liquidity with BTC. So it's been up long enough now, and people are starting to think it's never ever going to pull back. So therefore, you can, these bands are starting to fill up, and it's inefficient to sell an asset down into a low area, because you have to sell so much of your asset, and then the risk is that will you buy it back at a better or worse average? But if all of this stuff starts to fill up with liquidity between 121 and 112, then all you have to do is sell enough of it to set off a liquidation cascade, and then that helps you get all the way down to this bottom level. So someone in the Discord asked very recently, about an hour, less than an hour ago, whether 107's off the table, and I would say no, it's not off the table. It's getting less and less likely, every single day, because they build new high time frame support at higher levels. But is it off the table? No. If enough leverage enters the market and bridges the space between 122 and 112, then it's very much on the table. And we've seen, BTC do $10,000 candles before. It can do it, and then all it has to do is sit there for a little while before it does the next one, and people just bridge the gap. So and you can see with SOL down to that sort of 216 level. Then thankfully we've got quite a big gap there, between 216 and 200, which makes it a little bit hard for them to do it quickly, but we shall see how that plays out. Okay, so let's have a look at these charts. Where are we? This one. Okay. Right. So SOLBTC Strength. It's pretty much what's happened is it's hit this break level here at on the daily, and that is at about 18834. So what happens tomorrow is either it fails to get back up and touch that break level again, and if that's the case, that level becomes a higher time frame form of resistance, and then it's going to try and target some lower, higher time frame resistance, which from a daily perspective is not that far down, from where it is now. It's sort of more around that 181, so 18180 sort of area, and it could find that support there and then bounce back up again. So it's not game over, certainly. There are things like untested range trends, down in the 1.7 area. So of course it could go down and find support there and then go up. Once it starts going lower than that, then pretty much it's breaking daily structure again to the downside, and if it closes down there, then you're repeating this pattern of lower highs if it closes down here, and lower lows. So yeah, I wouldn't say it's in a great spot. It would have been way nicer for it to close up above that 19019 area, and then it would be above the range trend, above the break level, in a position to actually break the trend. We've got 3 hours to go. The markets are moving quite a bit at the moment, so it could do that. So I wouldn't rule it out. Across looking at the weekly, so exactly the same type of deviation of resistance, pretty much as what's happened on the weekly. It's gone back up over the top. It's run into the range trend. It's falling back down. Now, the weekly is in a spot where the next candle could open on the top side of the downtrend and then have the ability to go up and break the trend. So that is looking a little bit better. So what you can sort of take from those two time frames is, one of them is saying that you might get some further pullback to where we are now in strength. And the other one is saying that overall, though, we're in a position where we could actually come back from that after that. But the same thing applies. If we have a week where we don't get back to that 19012 level, then it becomes a higher time frame resistance. And once it becomes a higher time frame resistance, it becomes something that can reject more violently in the future. And that's what we don't really want to see at this point, because we are kind of working on the assumption that there is going to be one more push up. So preferably we don't see high time frame resistance start to form at these lower levels. And looking at safety assets. So as you can imagine, with things like altcoins looking pretty bad, safety assets are starting to push up. So the daily close, if we close around the 65.35 area, we'll be able to open on the top side of trend, and then we can push up into the break, and we can push up into this sort of 65.69, or these range trends, or the higher time frame resistance sitting up here at about 65.94. So this seems to be what it's all been heading towards in the last few days. We've had that little pull back, and that gave that little spike up in the alts, and now we're pushing back for a daily close potentially to break and push up into resistance. But the cool thing about pushing up into resistance is we'll probably get rejection, and if we get rejection, then that will give us that ability to have another sort of leg up again in the altcoins. So key levels for this really is where it's at now, 65.35. If it closes here, it's going to most likely push up to the minimum of the range trend that's coming through there at 65.68, and then it could push through that to what do we got there? It is 65.68. Sorry, 65.46 is the range trend, and then 65.68 is the break level. We don't want to see a daily close over that break level, because then it is just pushing up, and that would mean that pretty much down here at 63.18 was the end of alt season, which is probably not what everyone wants to hear. But hey, everyone were calling for this being the beginning of alt season when technically it was in June. Okay, looking at the weekly. So weekly has the ability to open on trend. It's holding the range trend. So to be fair, this is not great for alts. Like if it opens here, it can push up from trend. It can retest these levels, the hold levels, etc. above. And the weekly high time frame resistance isn't really until you get up to about 68.49. But you would expect some kind of pushback. As you can see, we've had that previously off the 66 area there. and then you've got an in-range tested hold at 66.44, and then into the greedy body of it there at 66.89. So all of this area up here is technically resistance, and that's maybe where it's off to hit that and then push down. But as you can see from just real basic market structure, low, high, and then unfortunately this could be a higher low. Now, for it to not be a higher low, it's pretty much got to get down below 60%. And getting down below 60% is actually quite hard because that is the high time frame support. So maybe a double bottom could come in on this if it continues to go down. And then the double bottom could get swept, because often that's what you see with double bottoms. And then that will 100%, if we get a double bottom forming here and then we get a sweep of it, I will just be completely out of longs on any altcoins, because that would imply the sweep and then you're going to head up to break the range to a higher level, right? Because that would mean that something like this over here is the base of the range. So yeah, we'll just have to keep an eye on that, see how that goes. But it's I would be moderately bearish on altcoins looking at the structure that's forming here, unless we see this these levels up here reject. You don't really want to see it get back over the 50% of this. Anything past that level there is sort of implying that this range is actually going to travel up, and dominance of stables and BTC, etc., are going to take over. So right, let's look at the totals. Okay, so this is technically total 2, so it excludes BTC. So it's pretty much just giving you an overview of all of the altcoins. Now, so we spoke about this yesterday. We created a hold level, which is a negative hold level, like it's designed to send the price down. We failed to hard close the resistance or the break level here at 1.71. And I think what I said is that this is the perfect place for a trap. So then what's happened is it's pushed up, it's gone and hit the high time frame resistance at 172. It's hit the interior trend. So effectively swept all of the trend liquidity between the two trends into the high time frame resistance, and then it's rejected. So the next candle is going to be able to open underneath the break level. It could take a tumble. This is where we could see it retest the bottom of the range here at something like 1.63. It could, like the most bullish scenario is that it has hard closed the hold with the candle that was a couple days ago. So the most bullish scenario is that it finds support at the 1.67 and then moves up from there, basically by reversing the polarity of this hold level from September the 20th. And what we really want to see, though, is that it needs to at least keep hitting that 1.69 level. Right, so what generates a high time frame resistance is basically a strike of a break level and then a inability to get back to the break level by a subsequent candle. So that's what made that 172 area a real pain, and that's, plus the fact that it approached it from the underside of a hold level, plus the fact that it approached it from the underside of three trends. It was just a trap, just a trap. So get people to buy the top and then pull back. The question is how much of a trap. So does it continue down? We've got things like retests of broken trends down here that we could go to. We've got range trends we could retest. We've got hold levels. There's pretty much, we could head anything down to, just on a daily time frame, we could go down to anything from 167 down to about 1.59, and that would just be a pretty normal daily move. So we'll see how that goes, but it's definitely not bullish, right? So just if your average YouTube or Twitter person is talking about 100x from here, that's not what this says. This says pullback, and then maybe. Yesterday it said trap. Guess what? A lot of people are probably trapped. Now the question is, does it keep going down and liquidate them. So that's what that says. However, looking at it now from a weekly perspective, we're getting a weekly hold level. We're getting weekly high time frame support at 1.51. And the question now is, if we do get a pullback on the daily to liquidate the people who, bought the top of yesterday's little pump in altcoins, how far down does it pull into the weekly before the weekly then pushes it back up again? Right, so that's kind of where we're sitting with this. We're going to get a new range trend up here at about 1.73. So we could see a double top sort of form based on price. And a move between these two levels. So anything from about 1.67 down to, well, it's 1.67, whichever way you look at it, because it's a weekly, but something down in this area, and maybe it pushes down a little bit further into it because of the daily, and then a push up to a double top, so, or higher, so there's no reason why it can't go higher, and we do have a broken weekly trend up here to retest. So as we start to get a little bit further into the higher time frames, the higher time frames are actually looking a little bit more bullish. The lower time frames are looking bearish, right? So all of that in simple terms means pull back and then pump. Right, so let's have a look at the 3-week. So 3 weeks high time frame support flipped 3 weeks ago, and then we retested it down here at that 1.49 area, and then we've pushed up. So effectively we're just stuck between trends, range trends, and support. The higher you go on timeframes, the wider the trading range is. Hence why it doesn't, always make sense to trade on really high timeframes, because you can make just as much money fractally trading on a lower time frame. The one concern about just this 3 weeks being is the accumulation has failed to reach the 3-week trend resistance. Now, when you fail to reach trend resistance, you tend to then have more downside afterwards. It's kind of like saying lower highs, right? So yeah, it was very close, but it didn't quite get there, which typically means the next candle would be down. Now, we are very, very close to this candle closing down. So currently it's sitting at about 1.69. If it was to get under 1.68 and close in 3 hours, that changes things ever so slightly, because it would actually create an interior uptrend from all the way down here to here, giving you a new support level to bounce off to try and move up. So this is one I'll be watching just to see how does the 3-week actually close. Because I'd almost just like to see this close slightly down so that we get a really good high time frame interior uptrend form, and then we can target that trend for an entry to push up and hopefully break the range trend and the topside trend. Outside of that, we are going to unfortunately get a little interior trend like that forming, and so now you've got a range trend and 2 topside trends all in the same spot, which means we could close up, have worse resistance. And I know that sounds really weird, but you'd think that if you close up for the week, it's better. But in this case, closing up for the week, because we didn't touch the topside trend, actually introduces a 3rd level of resistance above price. So yeah, I actually think it'd be better if we closed down, just for the future of being able to go up. All right. Monthly, let's not bother with. We got 3 monthly, not bother with. Okay, 13-week. This is the biggest time frame that we've got closing today, and I think mathematically 13-week actually fits into full cycles too, which is quite nice. So this is probably one of our best top indicators that we've currently got, because it will be a close. As long as we close over that 1.6, it's a close and a reclaim of trend. It's a close over range trend, and it's got a topside range trend target up there and around that 2.24 trillion. So as I said, the higher we go with these timeframes, the more bullish it actually starts to look. unfortunately, the break level for this is down here at 1.39 trillion. Now, the trend could propel us up. That would be our blow off top. We could spend up to 3 weeks in euphoria. Everybody is happy. Everybody's telling all their friends they should get into crypto and it's life-changing. And then the candle closes in accumulation, and then it goes into the bear market, which is actually just really coming back down here to retest the hard close break level. So just keep in mind, this could be it. This could just be up to the 2.2, 2.3 whenever it hits the trend retest and the range trend. A bit of time there for the big players to unload and to draw in all the euphoric new XRP and Zcash people, and there's new faces popping up and new traders popping up and all that kind of thing, in discords and stuff like that. And I think the main discord that I sort of hang out in has really started to take off in the last couple of months, and I think it would be really, really good to see it actually hold all the way through whatever the next cycle is, because making money when everything's pumping is easy. Everyone's a superstar trader, but if we can keep the hundreds and hundreds of members and just keep them there and actually keep them profitable all through whatever comes next, is actually probably going to be the sign of success. So yeah, so this is looking at a potential pullback to that 1.6 area. It's all quite confluent with what could happen on the lower time frame. So that means the pullback could be fast, and then the pump from that pullback could be fast. And then once the higher time frame stuff kicks off, it can move up pretty quickly up to these top levels. We're also sort of getting a really a backside hold here, which at about that 1.47 for the body, or everything's been so bullish lately. Most of these holds are just bouncing off wicks, and so that could mean that that 1.56 would be an area of interest. Anywhere really in the top part of that candle would be an area of interest if it's got confluence with the trends. And I do like just that level there, because I think 1.47 would bring a lot of tears. And I know that sounds cruel, but that's often what they do. They've got a lot of traders who have bought the top, and then they pull it down, they get the tears, and then they come back up because all of this stuff above drags the price back up again and sends it up to a new high. So right, let's look at the totals. We've spent a lot of time on totals, haven't we? So DXY daily, it's pulled back underneath the trend. Yeah, closing up or down. It's pretty much a doji. Doesn't know whether it's going up or down. We're on the wrong side of the trend for, and yeah, so basically we've hit high time frame resistance 3.94. So pretty much everything we talked about in yesterday's video has come true. We've hit the high time frame resistance. We've pulled back. The question now is, do we pull back further? There's no logical reason for this to stop here. Like it should just come down. The worst part about it is that if it closes up, then it actually coming down and staying down for another day creates another hold resistance level. So it's just almost better if it closes down and then creates a range. And the weekly, of course, is therefore looking good. So everything basically is saying daily bad, weekly good, monthly we'll ignore. Okay, let's have a look at Bitcoin. Okay, so yep. Hope everyone actually traded this right based on yesterday's videos. So we closed, we moved the trend to the top side, we pushed up, we hit a break level, we hit the top side trend, and we pulled back. So we haven't tested the 128.26 level yet on the daily, which is hard closed. So that is we've got a range trend confluence with a retest of what could be high time frame support. So that is our most bullish pullback if we were to pull back to that level. Anything below that's a little bit more bearish, but there are reasons to pull back. Like we've also hard closed things like the range trend down here at the 119s. And I think once we get to the weekly, we'll just see on the weekly, see if it's got anything bigger that's going on. But we've also hard closed and not retested 117. We have hard closed and not retested 115, 116 area. Our support trend is 114. This is actually the one that has got quite a bit of confluence here. Our front side hold and our support trend are both sitting here at 114.4. So if we simply move from one trend to the other, we'll be retracing to 114. And it's pretty normal to move between trends. That's kind of how wedges work. And the only question is how does it get through all of the support levels that have been formed? So let's have a look and see if we can see that on something a bit higher. So on the 2-day time frame, it's hard closing the 128.26 level again today, so that's good, unless it closes down for the day, and then it's not, in which case that rejection could send it lower. And then those same levels, 117, 116, and then we've got range trends down here, 113. Yeah, so that's, what's that? Nope. Yep, so that time frame, yeah, that time frame could aim lower, but it still has plenty of support. So I don't know. I don't know if it can really get down there. I'm beyond the fence about that. Looking at the weekly, this could do it. So weekly, we went up, we rejected the trend, we rejected the break level. So if this was to spend the next week down and not touch that 124.539 level, then that becomes high time frame resistance, and that is the equivalent resistance that started the bear market last time. So that's kind of really worth keeping an eye on. That would be something like, where are we? That's this. So range, up, hit, down, confirms as high time frame resistance, back up, huge dump. Okay, so we're part of the way through being able to do that. We've gone down, up, and then pulling back. If the next week doesn't touch that, then the one after that could create a big dump. So just keep that in mind. It is very toppy, and I know I've said we've probably got these things that can go higher, but you know, markets are fluid. If everyone is expecting higher, then that's probably about it. So as far as can anything good come of this? No, nothing good can come of this. It's either going to go up, in which case it's in a better state, or it's going to go down and find something like these 115s. It could bounce off the backside of this, but it is a doji candle, so something like that 117, 115 area again. There's a whole heap of range trends down here as well. So and this one here, which is a where's that, 115 to 114. So there's a lot of confluence around 115, 114 area if that was to pull back. Right, let's see what this looks like on the 3-week. So 3-week can give us a bit of hope. So it's rejecting off the resistance. It's got, so this is an in-range tested hold level. So it's a bit of a mix of structure and time theory. To create a hold for a range, you actually have to have a range. Now, I know that sounds a bit weird, kind of common sense, right? But you don't have a range until you close 2 candles above a hold level. So is that a hold level? Well, it only becomes a hold level once these 2 candles close. So therefore, the first test of that as a hold level shouldn't really be this candle's wick that's coming through here, because it wasn't a hold level. So there's a riddle for you. Now that has confluence with that 114 area, which sort of lines up with the range trend being retested that's coming down through the top side here on the 3-week. And it would be a dive of the trends that are not hard closed. So that 114 area is probably the only thing that can save that from heading down to these lower parts of the range. Now, someone asked today, is 107 off the table? Well, not really, because if it only has to spend a little bit of time under this level and or close a candle under one of these range trends, and then those areas are basically the next level of support is that 108, 107, 106, 105. It's pretty much everything, just in that cluster there. And but I think just given where we are, if we do find support in that 114 area, and that can happen within 3 weeks. Like, as long as we retest this top side within the next 3 weeks after finding support, then we can get over the top of that top side, and then we have a range trend sitting up here at the 135 area, and we have a retest of broken interior trend sitting up here even higher, sort of around that 140 area. So, this could easily be a blow off top scenario, much like what the totals are offering. And the only way for this to become sustainable support is to actually get the candle to close over 123,240, and then the next candle to close an accumulation to the upside. And then even then, you really should expect to retest it, and then the next one to move up. So for that to happen, time theory goes out the window because it's just going to take too long. Cycle theory goes out the window because it's just going to take too long to do it. It's more likely that we close on the underside of this, and then we find support, and then we push through it to do a sweep of all of the topside liquidity. And how high that short squeeze goes, who knows? And then somewhere in the next 3 weeks we come down. So that's kind of what that's looking like. And let's have a look at SOL. Yep, so yesterday we said we wanted to close above the Trump trend. We didn't close above the Trump trend. We closed on the wrong side of our support. We closed on the underside of our resistance. We closed on the underside of our accumulation ranges. The only thing that really was going to save us yesterday was that the daily is going to want to test this front side hold. And it certainly gave it a good shot, so we had that pump up through the resistance, probably trapped a whole bunch of people at the top. And as you can see, it's pulling back down. So all we really want today is for this to go back up. Hopefully we're singing our, rain dance song yesterday. We really want to get a close over 229.337. That would at least be above that weekly trend. And ideally we just want to get up and over and back into that topside accumulation range, which basically means being over that 131.5 level, and then that can give us the ability to actually push up. We still haven't tested the upper break levels, and we've got another hold level sitting in here at 244, and then we've got 249, which is high time frame resistance, and then we've got our trends above that. So I don't think it would be realistic to expect this to get past 249 to 253 without some kind of rejection, because much like what you've just seen BTC do and what you've seen the totals do, SOL's going to run into the same type of scenario of resistance all clustered in one place as soon as it gets into that 249 to 252 area. So it's basically going to be really old range trends, really old topside resistance, as well as newer high time frame resistance, all formed, all sitting in that area. So definitely expecting some kind of reaction there. But once that gets closed, then the opposite applies and it becomes a really big pump. So that's where we're looking. We're looking for that area to get hard closed, and then this thing could take off to the moon. But as it currently stands, it looks like it's going to close under the Trump trend again, and that's a nasty trend. It's basically caused so many of our dumps and pumps. So it gets a special color on the chart. Looking at the 2-day, same thing. We closed. We created a new trend. We went up. We rejected off the trend. So there's a backside level starting here at about 216. 216 to 213 in that area there. That's sort of where I would expect that to come down to. We're going to create a new support trend, and it really just depends on this close. Like if we close here, we're kind of right on the fence. If we pull back to sort of around 227.3, then we're going to cleanly open on the wrong side of the new support. That could give you a pump up again and then a push down. So just repeating that same type of structural trap that was created. It can unfortunately just give you a straight fall too, so that you can just dump. But we could go up. We could have one more little euphoric push and then reject, and then head down to this 216 to 213 area as our next place where we could potentially recover. Whether that recovery is sustainable is a whole other question, but it looks like it would potentially just push back to trend. Based on the levels, it might push back to that whole candle there that's rejecting. The levels are almost perfect. So let's have a look at the weekly. Yeah, so here we are. We're just unfortunately floating around that key trend. We want to close over it, not under it. Whichever way though, we are going to have a new range trend as resistance on the weekly, so that's going to be there. So unless we get up to about the 230s, 233 actually is probably about right. Unless we get to about 233 in the next 2 hours and 42 minutes, then this is also quite bearish. It could open, strike into that, and then it's going to have to come down to try and find support. The uptrend, which is running through here, would be confluent with those 2-day levels, sort of sitting between 216. Maybe it dives the trend a little bit. And we have got some, what's that? Very old high time frame support at 204. 204 is the 3 monthly level as well, so that could be your absolute dumpy dump. And we've got the broken trend. Actually, we're going to get a trend shift today as well. So that's more resistance coming in at 237. Going to get an interior trend shift because that candle didn't break it. Yeah, so the whole thing's setting up for a potential push up into resistance and then a dump. Or it could drop first and then push up, but that's just even more time spent going up and down. So yeah, it's not looking, I wouldn't say that that's looking very bullish. Certainly if it starts to move up, I'd be fading that. The only way for that to really be fixed, like I say, is to get up to that 233.5, 6, 7, 8-ish area, or really get up over the top of that resistance. It actually didn't touch that, which is even worse, really. I think it's... Yeah, it didn't touch it last week either. So we've got this high time frame resistance coming through at 237.5. The last 2 weeks, it hasn't quite made it back to 237.5, only by a couple $100, but it's pretty bearish. So really need to get over that level. and it would have been good to get over that level this week, but yep, we can't dictate what it does. So looking at the 3 week, so 3 weeks where SOL starts to get a little bit more bullish. We've tapped the break level and we've tapped it again, so we haven't converted that into resistance. We're going to get a new support trend forming today, and we do have still, we're holding that hard close 3 week level, that 204 level. Plus we've got, we're back up above a range trend, which comes through at about 215, 216 area. The new trend will be, depending on how long it takes to get there, anything between 204, 205 and up. So, this time frame is actually looking better. Yes, it's got resistance, but it's been tested. And yes, it's got support. If it hits that support, it could travel through to the next resistance. The next resistance is up at about 264, 265. So, and bigger picture wise, that's the kind of thing I'm probably expecting to happen. There's some kind of pullback to one of these range trends here, and you can see these range trends have supported moves, from about 137 up to 265 before. I mean, they've also rejected from 180s down to 124s. So there's a lot of strength in these, and based on the time frame that they exist on. So yeah, if we can get a retest of these, particularly that exact point, where is that? 213. Yeah, definitely be interested in watching what happens when it hits 213. 213 point something, which is going to be this one that's traveling up here, and it's also going to be that one, which is really old, from 2021, which is also what it couldn't close below, just from the 295. The initial candle wicked below it and then pulled back up and closed above it. So that was the 295 all-time high. So that trend is actually intersecting with the other trend at about 213 to 214. So anything below that level is of great interest to me to be building a position. Okay, let's have a look at, I thought I had a bigger time frame than that. Let's see. Maybe lost it somewhere. Nope. Please hold callers. And we're back. Loving that pause button. Okay, so the 13-week. Oh, no, that's the 3 week. 3 week again. What did I do? Oh, I'm an idiot. I think I did a 3 week chart and called it a 13-week chart. No wonder. Okay, let's just see. Does the 13-week have any structure? Brief glance. 176, 204 again, 204 backside candle. Let's see, do we have any trends? Loving these. Confluence. So we're above trend, backside level, 207s. Gonna get a backside candle, body only, 213. So it's confluent with the 3 week. Where could that go? 280. 213 to 280. Okay, so that's that. And actually something I did just notice, because I think we, where was that 3 week again? Look at that range trend. So we currently have the sandbagged $500 target, which I think we called the IA target. And then we had the MERT trend, which was up at about 1,000. So I think we should call this one. We're probably never going to get to this one, by the way, but I think it deserves a little alien face, and we'll call it, we'll call that one the SIN target, the SIN trend. So that's up at about 1,398. So not financial advice on that one, but still, we'll leave that on the chart. Never know. Never know. Okay, let's check out some of these others. Right. What do we got? Okay, so NA looks pretty bad on the daily. Looks like it's going to close back down under the range trend. So it had its wick up. It's grabbed that topside liquidity on the daily, rejected off the backside of the daily range, pulled all the way back down. There is the potential, obviously, that pushes back up above 0.59 by the end of the day, and then you're above the range trend and you can bounce again. If this closes below, then you could look to scalp the daily candle. I think what I'll do is I'll probably just scalp that daily candle and then call it a day for ENA, unless it actually gets a daily close back up above the range trend. So that's looking like it wants to go down. World Liberty Finance is under the support trend. Looks like it's going to potentially close under the support trend, so then that's going to drop down as well. Now, that does have that high time frame support level at 1940. So pretty much, if your belief is that the bull market continues and we get another leg up and these things are going to go, buying this somewhere between 1940 and 1867 is and that base trend there, which is down about 1858, is probably the best buy you're going to see on this thing if it goes down into there, and then chances are it'll be up from there. The wick on this candle is actually long enough too that the trend support's going to move to the underside of it. It's got an untested body hold up here at 2056. So the most bullish thing that could happen is that this actually gets in this little wedge here and then pushes up to the top side to hit that hold, because it hasn't technically broken the accumulation range because it hasn't closed under that 1940 yet. So it's a real fluid situation, this, where it's going to be in this wedge. It's going to have trend support. It's going to have trend resistance. It's still technically in the accumulation range. It's taking way more time in distribution than the accumulation, which means the accumulation was stronger. It went further in less time. Any kind of support from down here and a push up, would be possible. But yeah, like I say, it's fluid enough that it could also come down and test the high time frame support that's confluent with the base of this range. And yeah, it could go further, but basically buying anything down inside this area is potentially going to be the best buy that this would have before some kind of move up. Let's have a look at ZEUS. What's ZEUS up to? Probably should get a topside trend on ZEUS. Let's have a look here. Just going to pause it for a sec. Okay, so it's not in a bad place. It's going to open on top of the downwards facing main trend. So it could use that as support. It has tested the hold candle here at the top of the range, although that did reject. It's on the correct side of the downtrend for the next candle to be a little bit more free and clear to open. And so it could bounce off the trend down here at about 11 cents and then travel up to the backside of the range trend at about 14, which is where it runs into broken high time frame support, which would now be resistance. So it's really got to get up over that. The next step for ZEUS is it must get up over that 114.92 area, and then it could use the range trend and recapturing what should have been support and is now resistance to then push up to that next level, which is about the 20 cent area. And then once it gets over the 20 cent area, it can start to try and work up through the break levels. So that's when it can really start to move, like the candles get much bigger. but at this stage it's still really trapped in this. But this kind of compression with the volume is sort of indicative of a breakout coming. So yeah, I wouldn't rule this off. If you've got some money that you just want to take a risk on, you could look to put your stop below, which is pretty much zero. You could put your stop below the down facing range trend, and then see if you can get along in this. I mean, risk to reward. I don't know what that would be. Let's have a look. Risk to reward would be if it went up and tested the trend up there. Let's say it never got below the range trend. Could be about a 1 to 6, on that. If you entered there. And yeah, if you went real degen on it and just made the assumption that it's going to bounce straight off that, you could potentially get yourself a 1 to 20 if it went the whole way. So yeah, there might be a trade in there, but don't know. Cook, pop in levels, hard closed break, retest, boom, next one. So it looks like it's going to try and recapture the trend, and then if it does, try to keep popping levels. So this is sort of what you want to see in alt season. It's just at the moment we're seeing some tokens are doing it and other ones aren't. Real sort of rotation rather than just everything. Hype is creating a weekly resistance range trend. It's also closing underneath the prior high time frame weekly resistance, so I suppose that's to be expected. But it is also going to confirm 42.52 as a support level. So you could actually start to look, like I say, if you think there's going to be another leg up, you're pretty much wanting to get into this between 4252 and a retest of this range trend, which would be down around that 38-cent area. Yeah, that would be, and then your next high time frame support would be down in that 32-cent area. So like when it comes to laddering into high time frame longs, everything between these lines is just a waste of time. Like you're in here, you consider this, and you're here. Anything else is just pointless. It's just air gap and noise. Okay, so what's ASTER up to? So that's looking pretty bearish. If it can stay above trend, what's that? That's a 4 hour. Okay, so if it stays above trend on the 4 hour, it might come back up and target the 1.96 area. So, but it looks like it's going to open potentially on the wrong side of that trend and break it down again. There's a whole bunch of range trends just down here in this area though. So, and that actually is, that would be support there at 1.7750. So there'd probably be a scalp in this, even if it's just from the 1.7750 back up to the 1.8943, depending on how that closes with that trend. But yeah, if it doesn't have enough of a wick on the bottom of the candle, it's really the next one. The next one could shift the trend. So if it opens on the wrong side, has a dip, shifts the trend long, and then take it back up and TP at the range trend and the hold level in there. But for now, that looks like it's a bit bearish. What else we got going on? ENA we've looked at. ETH. Yeah, so ETH was stronger than SOL, like it, but it effectively did the same thing. It did not create the hold level yesterday, like SOL did, but it did open on the wrong side of the trend. It did create the range trend. It did shift the normal trend, and then it pushed up into all the resistance and then pulled back. But yeah, ETH's looking stronger than SOL at the moment. So that's I don't know, an observation that probably doesn't mean a heck of a lot, but you should see ETH pump before you see L1's pump anyway. So if the cycle is anything like last cycle, this should be stronger at this point. If it was to pull back again, it's got levels like a trend retest at 4358, and it's got hold levels kicking in from about 4242 down to sort of 4217, and it's got recaptured high time frame support there at 4256. So structurally, that's a nice looking chart. Like, it's gone through a lot of accumulation and it's hardly pulled back, like tiny little pullback. It's more consolidation this than even a pullback because it hasn't ranged. So that's, yeah, looking pretty good. Okay, so that's us for today. I think if you had to summarize it, I'd say that we might just get a repeat of yesterday where we get maybe a little push followed by a bit more of a pullback. Alts are looking weak. We need to really see a bit of a pump in the next 2 hours if we want to get above a lot of those key levels. If we don't see that pump, then yeah, expect to be able to get slightly lower entries. Hopefully that yeah, helps in some way. Like, subscribe, and we'll do this again tomorrow.